This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Record Friday, the S&P 500 closes at a new high. So do small cap stocks, and the Dow Jones Industrial Average breaks through 18,000 for the first time this year. Are there more big gains ahead, and where should you put your money now? Fighting cybercrime, it is one of the biggest threats to business. And today, at a summit in Silicon Valley, President Obama urged cooperation with the private sector to make the internet safer. All that and more tonight on Nightly Business Report for Friday, February 13th. Good evening, everyone. I'm Tyler Matheson. Sue Herrera is off tonight. Well, the bulls are back on Wall Street, turning Friday the 13th into a lucky day. The S&P 500 ends the week at an all-time high. The blue-chip Dow Index breaks above 18,000 for the first time this year, and not to be outdone, small caps also finished the day at a record. Strong economic data out of Europe gave the markets a lift early on, and hopes that Greece and its creditors will reach some sort of deal when talks resume on Monday. At the close, the Dow Jones Industrial Average rose nearly 47 points to 18,019. NASDAQ gained 36 points to a fresh 15-year high, and the S&P 500 was up 8. For the week, the Dow rose 1%, the NASDAQ up more than 3%, best week since last October, and the S&P 500 gained 2%. The energy sector was helped by a 3% rise in West Texas crude. It is now up nearly 20% from its lows last month. Brent crude back above $60 a barrel, actually above 61 for the first time this year. Both benchmarks have now risen for 3 consecutive weeks. What's behind the broad-based run-up, and is it a sign the bulls will stay in control? Dominic Chu reports.
It may not feel like it for many investors, but we are once again at record high levels in the stock market, at least when you look at the S&P 500. The broader large-cap stock index set a record intraday high today, led by energy stocks, which rallied on the back of higher oil prices. And a whole slew of other companies hit record highs as well, including coffee giant Starbucks, home improvement retailer Home Depot, and toy maker Hasbro. So, will this upward move continue? And will it get more people interested in buying stocks? Uncertainty about global risks is holding some investors back, but if that changes, that could help the bull run continue.
Right now, we have some possible resolutions to things. We have Russia agreeing to a ceasefire with the Ukraine. We have the Greeks talking to the ECB and the EU, trying to renegotiate their debt package. We have the Chinese reducing reserve requirements, trying to expand their global economy.
And it's not just overseas developments to keep an eye on. If the U.S. economy continues to gradually improve, that's an upside catalyst as well.
Our unemployment rate continues to move lower. The consumer is in a great spot. Consumer confidence is very high. And we could see, I think, additional spending on the retail side, which, again, consumer spending is 70% of our economy.
Of course, those are the positive takes. The more cautious in the marketplace point out the fragility of the global economic recovery. And they say that markets are priced for perfection, meaning if anything upsets the balance, we could be set for more volatility ahead. For Nightly Business Report, I'm Dominic Chu.
Here to talk more about the record-setting day on Wall Street and his stock picks is this week's market monitor, Eric Marshall, president and portfolio manager of Hodges Capital Management. It's a Dallas-based fund group that runs more than $2 billion. Welcome, Eric. Good to have you with us. How do you explain the market turnaround these past couple of weeks?
Well, I think it's really been a response to the commodity and some of the volatility that we've seen in currency markets and so forth. Just kind of settling down. We've gotten into earnings season, corporate earnings, and the outlooks that we're hearing from companies are relatively positive. And I think it's been a normal, one step back, 2 steps forward.
What's it like down there in Dallas, which is not really the epicenter of the energy world in Texas? I guess you'd say Houston is, but you're very close to it. A lot of the economy is dependent on it. What are people saying?
Well, in Dallas and in North Texas, we really haven't seen much of an impact of lower oil prices. And if you look at the Texas economy, it's much more diversified than it was back in the early 80s when we had the big oil bust. Mm-hmm. And so in Dallas, we haven't seen it. Anecdotally, you hear some things from Houston, but it hasn't had as big of an impact yet.
You know, we were speaking a couple of weeks ago here internally that we wanted to have somebody on who follows small cap stocks, as we focused a lot on the blue chips. And here, lo and behold, we have you on a night when the Russell is at record high. Why make the case for small caps this year? And I suspect that one of the arguments is that they are less prone to be whipsawed by currency moves.
Yeah, at the Hodges funds, we don't get too caught up in the absolute level of any market index. But within small caps, you can always find secular growth opportunities in just about any type of market. And to your point, they are more domestic centric, meaning that they have less foreign exchange exposure. They have more simplified capital structures. So I think it's really a good place for active portfolio management where you can get in there and do some individual stock picking.
Let's go through some of your individual stocks, beginning with Eagle Materials. You mentioned it last time you were here about a year ago. What's been going on there? It's down a little since then.
Yeah, they're a manufacturer of cement and gypsum wallboard. Both of those are seeing very good demand, very good pricing power. The prices of both of those commodities have been rising as the housing market and construction market continues to improve in different areas of the country. And we really like the earnings profile of the company, their earnings power over the next couple years. They do have a segment of their business that's relatively small that does provide frac sand to the oil and gas industry. And as a result of that, that's the reason why the stock is down over the past year. But we really think you're really buying the long-term cement and gypsum wallboard business, and you're really getting the rest of that business for free at these price levels.
All right, so that's the reason it's been stuck in the mud there. Jarden Corporation trading now at $51 and change.
Yeah, and this is more of a mid-cap stock than a small-cap stock, but it's one that we like here. They do over $8 billion in revenues, and they're a consumer product company. They own brands like Coleman Camping Equipment, Rawlings Sporting Goods. They own Mr. Coffee. They bought Yankee Candle Company here about a year and a half ago, and they have a number of other brands, and they're seeing very good organic revenue growth in these areas, as well as some acquisition opportunities. The company throws off a lot of cash flow. They've been aggressively buying back their stock with that cash, and it only trades about 15 times forward earnings.
All right, quick thought on Swift Transportation, big trucker.
Yeah. This is another area. When you look at the trucking business, it hasn't been very good over the last 10 years. And they're starting to see pricing power with some of the long-haul truckers. And Swift is really well positioned to take advantage of that. They've started to raise prices for the first time in about 10 years. And we think with a lot of the driver shortages and lack of investment in this space, we think they're going to be very well positioned to take advantage of these trends over the next couple of years.
All right, Eric, thank you very much. Have a great weekend. We appreciate it.
Thanks, Tyler.
Eric Marshall with Hodges Capital Management. Well, despite higher stock prices, sentiment unexpectedly fell in February for the first time in 7 months. This, according to the University of Michigan's preliminary sentiment index. The drop in sentiment due in part, apparently, to the recent rise in gasoline prices, energy workers' concerns about possible job losses, and even the harsh winter weather in the Northeast and parts of the Middle West. Now to what the White House calls a defining challenge of the 21st century, cybercrime. President Obama held a summit in Silicon Valley with chief executives from companies like Apple, Bank of America, Intel, and Walgreens, urging the private sector and the government to work together to make the internet and business safer. But as Eamon Javers reports, some big tech CEOs were no-shows.
A clash of cultures today at Stanford University in tech-centric Silicon Valley as some of the top federal cybersecurity officials came here for President Obama's Cybersecurity Summit. Raising eyebrows, some of the biggest names in technology were conspicuous no-shows, including the CEOs of Google, Facebook, and Yahoo. Silicon Valley insiders attribute the snub to continuing fallout from the Edward Snowden NSA spying revelations. Despite that bit of tension between the East and West Coast, the president signed a new executive order designed to encourage more cooperation between the private sector and government. And he told his audience the country needs to come together to deal with a common problem.
Foreign governments and criminals are probing these systems every single day. We only have to think of real-life examples, an air traffic control system going down and disrupting flights, or blackouts that plunge cities into darkness, to imagine what a set of systematic cyber attacks might do. So this is also a matter of public safety.
Also here, Tim Cook, the CEO of Apple.
If those of us in positions of responsibility fail to do everything in our power to protect the right of privacy, we risk something far more valuable than money. We risk our way of life.
Part of that clash of cultures between the government guys and the techies is the arms race to recruit top technology talent. Federal officials here said they know they can't compete with the Googles and the Facebooks of the world directly on salary, but they said they find ways to work around that.
We have a lot of embeds. We put a lot of agents out here in the Silicon Valley working with the technology companies. We leverage what they can do, and again, the government's never going to be able to match the pay scale, obviously. But there are plenty of patriots out there that want to be in law enforcement.
For the president today, this visit to the heart of the technology community was all about bridging those differences between government and the private sector. For Nightly Business Report, I'm Eamon Javers in Stanford.
MasterCard and Visa both announcing plans to expand their security features for online shopping. Visa plans to do away with traditional account numbers and instead use a unique series of numbers that can authorize payments. MasterCard, which plans to spend more than $20 million on its initiative, will let customers verify transactions using voice and fingerprints. MasterCard plans to launch that program in the spring. Now to the West Coast port labor dispute and ConAgra. It became the latest company to blame its weak profit forecast on the traffic congestion out there. The packaged food company said the slowdown is hurting some products it exports. Shares of the company off 4%. And as the slowdown drags on at those West Coast ports, one sector is most at risk: retail. We may learn more about the extent of the impact when retailers begin reporting earnings next week, including the world's biggest, Walmart. And as Courtney Reagan tells us, investors will pay close attention.
Consumers may be looking forward to ditching winter coats for spring apparel, but retailers are having trouble getting that spring merchandise in stores. As disputes over labor contracts continue, the West Coast ports responsible for nearly 40% of all U.S. cargo are shut down for a second straight weekend, which means merchandise is stuck at sea or in containers, far from the intended retail destinations.
I see some stores that are out of balance, still featuring what I'll call winter and holiday goods, when at this time of year, that should be relegated to the back racks on sale, and the front should be all fresh new merchandise. So the balance isn't right.
Target, Best Buy, Michael Kors, and Ralph Lauren are among the retailers that have brought in orders early to protect inventory levels and are using other points of entry and distribution to get merchandise into and through the country. Container volume at LA, Long Beach, and Oakland ports dropped 25% or more in January from the year prior. But despite the lower volume, the Journal of Commerce says some West Coast shipments that normally take 2 to 6 days to unload are now taking up to 3 weeks. Circumventing West Coast ports helps get merchandise on the shelves, but it comes at a cost, up to $7 billion this year, according to some estimates. Getting cargo from Asia to the East Coast takes longer and adds to expense. Air freight is also more expensive, both backup plans crimping profit margins. As retailers reroute goods from Asia to East Coast ports, Stifel analyst Richard Jaffe points out overflow is now putting those ports at max capacity.
A doomsday scenario, if you will, is that the product comes in late, the season is therefore shortened, retailers have to accelerate sales using discounts, the consumer perhaps benefits with discounted prices, but the retailers suffer because of a short season and greater discounts.
Credit Suisse says brands with diversified points of distribution, including Nike, Tumi, and VF Corp, should be more insulated in the short term, while Lululemon and Deckers could suffer more because of concentrated West Coast distribution. So while contingencies are still working to avoid a material impact on business, if an extended shutdown or strike occurs, industry-wide consensus is no retailer will go unaffected. For Nightly Business Report, I'm Courtney Reagan.
Still ahead, how the steep drop in crude prices in recent months has one city on edge, wondering if its housing rebound could fall apart. The number of U.S. oil rigs continues to fall, according to Baker Hughes. Drillers idled 98 rigs this week, bringing the total rig count down 30% since October. A very steep fall there. Some look to rig counts as a leading indicator of production since they are used to drill new wells. But U.S. oil production overall remains at multi-decade highs. Now to Texas, the state driven by a strong energy-focused economy. It is suddenly now feeling the impact of oil prices that are now about half their year-ago levels, though up from their lows. Layoffs being announced at big energy firms, and if the unemployment rate rises, the Houston housing market could eventually feel a bit of a chill. Diane Olick has more.
David Hopkins sold his Houston area home last fall for top dollar. He says he timed the market just right.
I feel really glad. I'm like that guy that sold his oil company last year. He's feeling pretty good right now too. I feel that same way.
Both home sales and prices hit record levels in Houston last year, fueled by a booming energy sector. With oil prices now cut in half, Houston is already losing jobs, the primary driver for housing.
Now that oil prices are down, things haven't completely changed, but let's just say that things have come to more of a stall.
It will take significant time for the drop in oil prices to trickle down to Houston's housing market. In previous oil downturns, it's taken 18 months to 2 years for the job losses to factor into home prices. But all eyes are on Houston now, with the oil industry accounting for about 5.6% of its jobs. This especially because it was the nation's hottest housing market barely a year ago and is still growing. Single-family Houston home sales jumped 6% in January from a year ago, and prices hit a record high, up 7% from a year ago. The only problem now is supply, barely 2.5 months due to all the demand. This as builders start to get careful. KB Home CEO last month said the builder had pulled out of a couple of land transactions in the fourth quarter because of, quote, sensitivity there. But they claim they are not seeing any pullback yet by consumers.
Because it hasn't been hit yet doesn't mean it's not going to happen. So I think patience is the buzzword. We're expecting that Houston will cool down significantly on the residential side.
Just for context, energy has really pushed housing recently. According to Trulia, in the 7 large metros where oil-related jobs are at least 2% of the total, home prices rose 10.5% year over year last year. That's a lot faster than the rest of the nation. Now, the reverse is in play. For Nightly Business Report, I'm Diana Olick in Washington.
For more on the state of housing in Houston, head to our website, nbr.com. Well, Powerhouse Brands help bolster VF Corp's results, and that is where we begin tonight's market focus. A parent of brands like the North Face and Vans reported results that matched on both the top and bottom lines. Profit did fall from last year as the company booked a write-down on the value of some of its brands, and the company warned investors about negative effects from currency fluctuations for 2015. But revenue still rose on strength in its outdoor and action sports division. I know no kid in my town who doesn't own a North Face jacket. Shares popped 6%. 75.26 was the close. Nordstrom jacking up its dividend by 12% to 37 cents a share. The new payout will be made to shareholders in March. The yield on the dividend is up more than 1.5%. Shares spiked initially in after-hours trading. Before the close, the stock was up a fraction, 79.41. And Smucker, J.M. Smucker that would be, reported mixed results today with revenue missing estimates. The owner of Folgers Coffee said weakness in its coffee business weighed on the results, but it is expecting business to get caffeinated again this year as prices stabilize. Shares were up more than 1% to $113.89. And Alibaba has received a request for information from the SEC. The agency is looking for information related to its interaction with a Chinese regulator. Alibaba says it is cooperating with the request. Shares fell initially in after-hours trading. Before the bell, the stock was up 2% to 89.05. A rising economic tide lifts all boats, and that is especially true for the boating industry as the economy improves and people feel better about making big purchases. Boat manufacturers expecting solid sales growth this year, and they're kicking off their season, as they so often do, in Miami, where thousands of boats are on display at 2 separate shows. Morgan Brennan is there.
A big weekend for boat enthusiasts as more than 100,000 people descend upon Miami for 2 annual boat shows. After years of sluggish demand, brokers say business is finally recovering.
Over the last 2 years, we've seen slow improvement, and it's directly related to the stock market. As the stock market inches up, our phone calls increase. So with the stock market being in charted territory and the demand has been pent up, people are buying yachts.
And it's not just luxury watercraft. The National Marine Manufacturers Association estimates sales of new recreational boats grew as much as 8% last year, and it expects that momentum to continue.
As we look out over the next few years, we think we've got 3 or more years of pretty good growth in new boat sales.
That's good news for an industry rocked by the recession, when new sales plunged to 60% and 1/3 of retailers closed up shop. Since then, to recapture consumers, companies have had to change their strategies, rolling out new models at lower price points. Industry leader Brunswick Corporation says demand is coming from both ends of the consumer spectrum.
A lot of our bigger models were completely sold out over a year. And then pontoons, fishing boats, which tend to be smaller, different income level, have also now begun to reach pre-recession levels. So at one end of the market and the other end of the market is very powerful, very strong, and growing very much.
So what's fueling demand for all of these boats? An improving labor market, rising consumer confidence, and increasing disposable income thanks in part to lower gas prices. But for now, here in Miami, people are buying boats, and with thousands to choose from inflatables to runabouts to yachts, there's something here for everyone. For Nightly Business Report, I'm Morgan Brennan in Miami.
Coming up, money and marriage, why planning a different kind of date this Valentine's Day could lead to not only marital bliss, but also financial harmony. The window to enroll in health care under the Affordable Care Act quickly closing. Midnight Sunday is the deadline for coverage this year, and those who don't enroll may be subject to a penalty. Federal officials say they've seen a big pickup in traffic on the healthcare.gov website over the past few days. Well, 2014 was a rough year for Atlantic City, but this year, so far, off to a more encouraging start. Casino revenue for January was up almost 19% compared with a year ago, even though they've shut down a lot of casinos. Part of the reason is less competition for the 8 casinos that are still there. Well, looking for a Valentine's gift for your significant other? You might want to forget the flowers and the chocolate and instead plan a date, a money date, because as Sharon Epperson tells us, that could be the most valuable gift of all.
Mark and Evan Elkowitz have been married for 18 years. They like to talk about everything, even money.
We certainly have conversations about money.
Sometimes they're not called conversations.
Sometimes they're more like avoiding injury than conversations.
Like many couples, they have occasional arguments about money too.
Many people weren't brought up learning how to talk about money with their partner. So maybe your parents didn't talk about money in front of you, or maybe didn't even talk about money at all, or they fought about it.
It's a crucial conversation to have. But nearly 40% of couples in a City Double Cash survey said they haven't set aside time to sit down and talk about their finances in the past year. About 30% wish they'd discussed it more.
Yes, scheduling a time to get together. It can be a fun, like go out and have a date. It doesn't have to be something hard and boring to sit and talk about.
I think planning a date in general is a hard thing.
A fun date, let alone an accounting date.
Right. The Elkowitzes find the time to have their money talks in other ways. They divide and conquer when it comes to managing the family's finances.
I pay all the bills, by the way.
Yeah.
I pay all the bills. Everything.
Mark, a plastic surgeon, is the primary breadwinner, while Evan, a personal stylist, handles everyday spending.
It stresses me out. I don't want to know. You know, I'd rather be in the OR taking care of something than look at a phone bill.
Well, the phone bill's not there.
Or
the
yeah,
Amex,
or a credit card bill.
The Elkowitzes try to strike a balance that keeps both of them involved and honest about what they own and what they owe. But when it comes to love and money, not all couples are as transparent. In the city survey, nearly 1 in 4 in a committed relationship admit they have a private account that their significant other doesn't know about. Yet many more admit they would prefer it if their significant other discussed finances more often.
You really need to come clean with your money. So if you have a secret, whether a hidden account or debt that's out there, or spending that you're not telling your partner about, maybe you spend cash so they don't know what you're spending money on, or you hide bags in your trunk or in the back of your closet, then come clean. Because it's really hard to have marital bliss if there's not financial harmony.
Money advice to weather those challenging times, for better or worse. For Nightly Business Report, I'm Sharon Epperson.
And that is Nightly Business Report for tonight. I'm Tyler Matheson. Thanks for watching. Have a great long weekend, everyone, and we will see you back here Monday for a special holiday edition of Nightly Business Report.